couple create a shared portfolio together?
The day you buy jewellery, you already taken, not giving you 100%.
How do you choose the right and the correct fund manager?
Doing lump sum investing at the right time can be more effective.
One philosophy of yours when it comes to investment, you never break.
One of the options is FD, but that is not the only option.
Mutual fund and stock, कौन से में ज़्यादा invest करना चाहिए या दोनों में करना चाहिए?
It gets a lower rating, but that doesn't mean it's a bad fund.
वहाँ पे SIP करना is a good choice to make.
Free cash flow to market cap, the ratio is low, but the growth is.
Which sectors would you recommend to invest in? आपको लगता है कि इंडिया में इन्वेस्ट करो उससे ज्यादा बाहर इन्वेस्ट करो तो रिटर्न ज्यादा है? Tech stock is growing with 40% annually versus FMCG stock is growing by 15%. So, which is safer for long term? Welcome to Unscripted with Shah, powered by Shankus Season 2. Warren Buffett once said, risk comes from not knowing what you are doing. And for most of the people, that's exactly how equity market feels. And today most investors struggle because they don't know what to trust, who to listen to, or how to stay consistent. And that confusion creates the biggest barrier in financial growth. Please help me welcome Mr. Bhavin Shah, founder of Sameeksha Capital and one of the finest minds in equity. Hello sir,
Hello,
welcome to the show.
Thank you.
Please have a seat. So sir, how are you doing today?
I'm doing well. How about you?
I'm doing good. So sir, you have spent 3 decades in the field of equities, right? And you have also held roles into global head technology like JP Morgan's, to name a few. So can you just help me understand like what moments just, got you into this journey of yours?
I studied engineering in undergrad, and I developed interest in VLSI microprocessor design. And so to learn more about that, I went to US and did my master's in engineering, and actually ended up working in, got an opportunity to work in engineering field in design of microprocessors.
Wow.
And, with some of the finest minds in the industry, working on world's fastest microprocessor chip. So I was actually deeply involved in engineering field, but then I had this burning desire to eventually return to India, and I thought that engineering of that kind will probably be unrealistic to do in India. Right. And that's why I thought, what else can I do? And I, growing up in Ahmedabad, the city of investors, I also had a bit of interest in equities. And so I thought of developing a career in equities, in investing. And that's why I decided to go back to college and get another master's degree, this time MBA. And basically, that's how I entered this field.
So if I'm not mistaken, you are dropout from IIM?
Yes. So actually, because I wanted to work in India, right, I thought getting a business degree from India would be beneficial, and that's why I applied and managed to get into IIM Ahmedabad. But eventually, I dropped out and ended up finishing my MBA from Booth, University of Chicago.
Right. So is it true, sir, when you study outside, the method, especially when it comes to finance, वहाँ के methods and तौर तरीके are very different compared to how India operates?
Yeah, I think if you talk about education,
yes,
I think the education is definitely very different. I think the faculty, the professors make immense effort to make subject palatable to the entire audience in the class, because unlike those days in the business MBA class in India, where 70% of the students were engineers, and professors took it as a challenge, to make sure that the students are really getting the best out of the course. We had a chance to grade every professor after every class.
Oh, that's great.
Yeah. So there are some significant
pros and cons about it, right? What is that one philosophy of yours that, no matter what, when it comes to investment, you never break? Is there any one rule?
One rule, I would say, understand what I'm investing in.
To have proper knowledge about it before investing, right? And I have seen this myself and people around me. You have seen the bearish and the bullish side very closely, right? So what, according to you, are common misconceptions people have regarding equities?
Equities are too risky and they don't want to touch it. Maybe they had some bad experience in the past, or maybe, that's they have observed it from outside and they just, hear about the ups and downs of the market and get, sort of stay away from it. And then there is another set of investors who think it's too easy, and they want to make very quick, they they hear about people making quick returns and they also want to do that. And so they invest without really understanding what they are doing. I think both. I think those
Extreme sides are there,
Yeah,
right?
yeah, and those are the misconceptions that I think
People have.
Yeah.
Right. I would like to add also, correct me if I am wrong. Also, sometimes what happens कि short term जो headlines पे आता है, तो stock market prices changes. So I personally feel when it comes to equity is more about it's not about prediction. Prediction पे आप invest नहीं कर सकते. You have to study the data. Is that true?
So I think there are different styles of investing, but studying the data is definitely the most important, no matter what the style is.
Okay.
Studying the data means understanding the history of the business or the company, the industry, the economy, and figuring out how things work or things have worked for a particular company. So there are a lot of things you can study about the past, which, and then look at the data, as you said. Some people rely a lot on their ability to predict what's going to happen in future. But they are doing that prediction relying on the data. Some people don't say, I don't want to look at the data. I don't want to predict. I just want to rely on the history and do the investing. Both styles are prevalent. But data is common in both
Data
cases.
is common in most cases, right? So, sir, I would like to really know about mutual fund because it is one of the, at the top when it comes to investment in India. Mutual fund, what are the myths that people have, and that's why they don't invest?
I think one is just awareness of, that mutual fund is a very, overall, a very, easily accessible asset classes. People may not even be aware of it, how to invest in mutual funds. I think sometimes, especially when the market goes through a correction or a significant decline, mutual funds also suffer the same way. And so when people look at that experience, and in the history, what has also happened many times is that a lot of people enter and invest at the wrong time. They see a big rally in the market and then put in a lot of money at the end of a rally, and then there is a big correction, and so they get really disappointed, and that's when they start to feel negative about mutual funds and markets in general.
Are mutual funds actually one of the safest thing for beginners?
Mutual funds, we can talk more about mutual funds. There are different types of mutual funds. It's a very, very big, set of options that are available. But as long as the right options are chosen, they are very safe for beginners. In fact, that's the only way beginners should start investing.
So can you just give few examples?
Sure. Yeah. So, there are mutual funds which basically give you roughly the same return as the market.
Okay.
So these are like the simplest ways to invest. You don't have to once you invest, hopefully you choose the right type of fund. But as long as you do that in terms of, because what I explained, they are called index funds. They are available from multiple industry players. So you have to just choose the right option there. But once you invest in an index fund, you're going to get just the market return. You don't have to worry about selecting A fund versus B fund, and A fund manager versus B fund manager. Broadly, once you select the index fund, you're going to get the market returns.
Okay.
So that is how beginner can start, and they are very simple and the right way to start for a beginner.
Sure. And how do you do the allocation of those funds? Like for example, large cap fund, mid cap fund, and small cap funds. So basically, what percentage should be there ideally, according to you?
So so there are if we talk about doing one allocation and then sticking to it, in other words, not really making too many modifications, I would say that money that you're not going to need for a very long period of time, invest in small cap, because overall the small cap funds give you probably the higher returns, but they will also be more volatile.
Yeah,
there will be also more ups and downs. So the money that you're going to need, let's put it this way, you have money that you think you're not going to need for at least maybe 5 years or even longer, then small cap is the right place.
Okay.
If the money that you're not going to need for say 3 to 5 years, maybe you can go into large cap or mid cap. And money that you don't need for say less than 3 years, then don't invest in equity funds. Okay. Choose in funds that kind of give you close to fixed return, but then they're very safe and not very volatile.
Okay, so basically, if you look at the percentage, how you explained, so can it be 50, 30, 20?
I mean,
Just
again,
roughly. It depends on the
how much your money, what is your
in hand
requirement. So financial planning is very important.
Right.
So this is, one of the things we do is we go into financial planning with a person, what is their income level, what are their requirements of cash, any big expenses coming up, when, and accordingly we can plan this. But yes, I think if you have substantial, enough money that you don't need for a longer period, you can go up to 50-60% in small cap.
Right, and also if you are ready कि इतना risk लेना है, only then small cap is advisable, right?
Right.
I have faced this problem of fund manager. Starting with fund manager, like how do you choose the right and the correct fund manager? Because I have faced this problem, and I don't want people who are listening to us face this problem because I've wasted years, I feel.
Most of the investors, that it is not easy to decide how to select fund manager, and that's why I suggested the idea of index fund, where you're gonna get market return. You're not gonna get more, you're not gonna get less, but at least you're gonna get market return. Now, let's say you want to go further and want to decide how to select a fund manager. There are a lot of things you can look at. How have they invested in the past? The type of companies in their portfolio that they have invested. What is there are various performance measures available. They call it, risk-adjusted ratios. So how much risk he has taken, how much return he has delivered. Has he delivered better return against market? Not only for just one period, but different periods. We call it rolling returns.
Right.
So you measure returns at regular intervals for the past, and then kind of do how overall that looks. So how consistent the returns are. Is it like he just had a great return for one period, but otherwise not? So there are many things one can look at to understand the investment approach of the fund manager. How long he has been the fund manager of this fund that you are investing. Because sometimes what can happen is fund manager also changes. So when you're looking at the data of the fund, you could be looking at the data of a different fund manager.
Right.
And this fund manager only recently started managing the fund.
Yes.
So all those things become important.
Right. So when you mentioned about index funds, right? Flexi-cap funds भी होते हैं, right? तो flexi-cap funds में invest करना better है कि अपने खुद के funds, like you should invest in different categories. What is advisable?
So flexi-cap एक अच्छी category है. मतलब उसमें क्या है कि the fund manager has a lot of flexibility where to invest. So sometimes let's say the market. In the market, it looks like small caps are overvalued, then he might invest less in small cap. And shift. So that way, flexi cap is a good category. There are fund managers in flexi cap who have consistently delivered better returns in market. So those funds can also be chosen. So I think if at least in my view, I would say small cap is a good. We talked about initially about allocation. So small cap is definitely a good category because of the potential of return. The second good category would be flexi cap as opposed to large cap.
So what is the smartest way for somebody who has no irregular income? So what is more beneficial?
Doing lump sum investing at the right time can be more effective than just doing SIP. But then question is right time, right? So how to find that right time?
Exactly.
So yes, I mean, one has studied the market enough. You can look at certain ratios and valuations and decide that this is actually a very good time. Like say, for example, in say March, April 2020, there was a big correction in the market. Everything was very, very attractive. So that's a great time to put in lump sum. Similar, but on the other extreme, like a couple of years back, market had run up a lot for consistently multiple years. Everything was looking very expensive. So that's a good time to take some money out also. But that requires a bit more sophisticated understanding of the markets. But yes, if you have that and you can do that, then you can make more returns through the lump sum method. But on the other hand, SIP is has proven to be very reliable way of investing for most investors. So yeah, I think I would suggest both. Do an SIP, but then from time to time, once you develop understanding of the markets, maybe a little bit of lump sum approach can also be helpful. on top of SIP.
On top of SIP, okay. So when, like you mentioned that जब market high level पे होता है, when it's on the higher side, तो वहाँ पे SIP करना is a good choice to make, because stock में generally हम उल्टा करते हैं, जब market गिरता है तब हम invest करते हैं, तो SIP में effect होती है या नहीं होती है?
SIP का मतलब ये है कि आप market कहाँ पे है देखो ही नहीं.
हाँ.
You are committed to putting a little bit of money every month. Let's say you keep putting that in. As long as your income stream is continued. When let's say you stop having income, maybe you retire, then maybe you start thinking about withdrawals if you need that money.
Right.
But otherwise, yeah, you should not try
think
to
about the market.
That's why I'm saying maybe give little bit of gap, and have some ability to put some lump sum also. And another thing you can do. Let's say you've been doing an SIP and market has gone up a lot, and you feel like maybe you did a little bit of homework and feel like this is stoppish, right? So you can withdraw some money, but don't break your SIP.
Don't break your SIP.
So that's what I would say.
Right.
Because you withdraw some money, maybe if sometime later market corrects, then you can put that money back in.
Yeah, definitely. And SIP में कब exit मारना चाहिए? How to know that this is the red flag and there is no point investing in that particular fund?
एक तो fund की बात है. तो fund, if you have invested in a fund, and let's say their fund is consistently not performing, or the reasons why you invested are no longer valid, fund manager has changed, then one has to really take a think about exiting the fund, or at least stopping the SIP. The other reason could be that, let's say that obviously your income stream is changed, and so you don't want to commit so much more to investing. That is another reason. So those could be some other possible reasons.
Okay. And audience, let's get ready for another poll. So which one do you prefer when it comes to market crash? Number 1, SIP. Number 2, lump sum. Or number 3, you'll pause your investments. Now, if we talk about stock investing, right? So what is your opinion about investing in an IPO?
There are two aspects of it. One is selecting the right company in the IPO. It requires a lot of effort. For an average investor, they don't have access to all the information. Obviously, company comes out with a big document
reports,
but that only gives you a lot of historical data. So if you're really good at analysis, yes, you can develop a very good picture of the business. But then there is also things that you want to ask the company. I mean, you may attend their roadshow, meet that brokers are invited to. But again, even there, you will only get certain amount of information. So as an individual investor, you have certain disadvantages that you don't have access to all the, you can't ask the questions and, get the responses. Maybe if the company has provided that information in public domain, you can do. But in the end, all these factors are there. Now, let's say you found the right IPO. I mean, obviously, some people rely on the gray market premium and just put in an application and get a little bit of that, allocation. So to me, that's not exactly investing. That's just taking advantage of the way IPO allocations happen. But if you want to really look at how to invest seriously, it is better to wait for the company to get listed. See how it does for a couple of quarters and then decide. Because sometimes there is a tendency that companies, it's like शादी हो रही है तो दुल्हन को सजाया जाता है. The same thing happens in IPO.
Right.
So the companies can sometimes you realize that companies were doing so well till the IPO, and then suddenly they start not doing well because those past numbers might have been massaged to look better.
I have faced this situation because I had bought Nykaa shares, like I told you that day, and it came drastically down. So at that point of time, I realized that if you want to invest IPO में तो बहुत सोच समझ के IPO में invest करना चाहिए. तो म्यूचुअल फंड एंड स्टॉक, राइट, बोथ, इनमें से कौन से में ज्यादा इन्वेस्ट करना चाहिए, या दोनों में करना चाहिए, या ओनली वन पे फोकस करके वो पोर्टफोलियो बढ़ाना चाहिए?
इफ आपके पास वक्त है, समय है, और सूझ है, मतलब पता है कैसे इन्वेस्ट करना है, तो स्टॉक्स में कर सकते हैं.
ओके.
क्योंकि उसमें बहुत समय जाएगा, बहुत काम करना पड़ता है, बहुत सोच समझ के करना पड़ता है. तो वो दोनों है, बिल्कुल करिए स्टॉक में रिटर्न ज्यादा भी मिल सकता है. लेकिन अगर वो दोनों में से एक भी चीज नहीं है, तो then mutual fund is
the best option to do. Also, so what are the 2 to 3 ratios that you can recommend, before investing into any stocks?
So for me, I am very focused on cash flows of a company. Cash flow is basically, after accounting for all the expenses and investments for future, what is the cash that company generated? So that is free cash flow. So that is very important to me. Now, in some cases, companies may not be generating, and what is the ratio of that free cash flow to the overall valuation market cap of the company?
Okay.
But in some cases, company may not be generating free cash flow. And so in that case, I can look at operating cash flow, which is cash flow generated before investments for future growth. Both ratios are important. And also, one shouldn't just look at one period, but how it has been in the past, because sometimes there are one-off factors that affect the ratio for 1 year over the other. But those ratios and how they, the valuation based on that is more useful to me than the PE multiple, for example.
Okay.
Now, if it's this works for companies which are not in the financial sector. If the companies are in the financial sector, then one can look at the ratio of what they call price to book or market cap to net worth of the company, and how it looks compares to the return on equity, return on asset of the company, and then all these ratios are have to be looked at also in conjunction with future growth potential
of the company.
So the ratio. If the ratio is low, say or the ratio is if you talk about yield, for example, so free cash flow to market cap. If the ratio is low, but the growth is good, that's a great investment opportunity. We, at Sameeksha, we also do something called Sameeksha ratio, which is our own ratio, which is the ratio of price to book divided by return on equity minus cost of equity. It's a ratio that kind of takes into account almost everything except future growth. Achha. And so we use that to gauge the our portfolio, how it is compared to market and so on.
Okay. Very nice. Mutual fund and stock की जब बात करें तो जैसे star ratings होते हैं, right? Value research is there, morning star is there. तो वो कितना effective है while taking a decision, or is it misleading for an investors?
So they do very good, detailed work to come up with this rating. So I won't say they are misleading, but whether or how useful they are in predicting future returns, that I think is a tougher question. So if let's say the rating is given that also incorporates valuation for a stock we are talking about, then it might be more useful. But if it's more of a reflection of the quality of the company, great, higher rated company with good quality, it's a useful input. But that alone is not enough to decide when to invest in a company. There are companies which would, I'm sure, receive very good ratings, star ratings, but then the stock doesn't perform.
Exactly.
Either because the stock has already gone up too much, or because the industry doesn't do so well in the subsequent years. So that's why investing is a little bit more complicated than just relying on the rating of the stocks. Now, if you talk about the mutual funds, it's slightly different. Because there they might have taken into account multiple factors, but again, it can also be backward looking. So the question is whether the rating is forward looking or backward looking.
Achha.
And forward looking ratings are harder to come by than backward looking.
Okay, so you should not only rely blindly on the ratings.
Right. It can be one of the inputs into your analysis. I mean, sometimes what happens is if the fund is new, let's say, the weights in the rating may be the longevity. How long the fund has been around. Just because it is not new, it gets a lower rating, but that doesn't mean it's a bad fund.
It's full time again. So what will you do if a company reduces its dividend by 50%? Number one, you will sell immediately. Number two, you will hold, expecting recovery. Or number three, you will buy more. So, आप क्या suggest करते हो? Which is said like, don't put all the eggs in one basket. So, for example, SIP 50,000 per month किसी की जा रही है. तो पहले तो कितने funds होने चाहिए? 2, 3. What do you recommend?
See, वैसे कोई clear formula तो है नहीं, लेकिन the portfolio you have should give you exposure to variety of things in the market. So we talked about flexi-cap, small cap. Those give you very different exposure.
And sectors also.
But if these funds are sector agnostic, then you are relying on the fund manager to invest in the right sector. But apart from sector, there is also a question of style of investing. Okay. So one fund manager may give you exposure to one style of investing, and maybe you choose another fund manager with a slightly different style. So maybe that way, because in market sometimes one style works well for a while, then another style works well for a while. So maybe if you have a combination, then overall in the long run, you get the right balance. But I think I would say anything less than 4 funds is too little. Anything more than 10 is too much. So I think somewhere in between may be the right answer.
Okay.
But other thing about diversification is when you talk about funds, which market are you getting exposure to? So obviously most people have invest here in the Indian equities, but there are options available also to invest in funds that give you exposure to outside India.
Yeah.
And India is a small part of the overall equity market globally. And if you get exposure to the global market, actually you are more diversified, and also your risk goes down, and return may be even slightly better. So I think that combination is also something to consider.
So what is the most tax effective way when it comes to withdrawal of money from mutual fund?
First of all, I'm assuming the withdrawal is happening because if somebody needs money, or maybe is taking a call on the market.
Right.
Now, advantage of mutual fund, at least in an Indian context, is that mutual funds themselves don't have to pay any tax. It's only on the withdrawal that you are paying tax.
Right.
So as long as you hold the fund for more than a year, you're going to pay long-term capital gains tax. Whether you hold it for 1 year or 10 years doesn't matter. So, I mean, so I think avoid doing short-term withdrawals, less than 1 year. But also for more than a year, don't withdraw unless there are reasons to withdraw.
Yeah.
So yeah, that's what I would do.
And how can a couple create a shared portfolio together?
Shared portfolio in the sense?
Shared portfolio मतलब साथ में अपना portfolio create कर रहे हैं depending on the lifestyle, their goals, because I feel individually तो सब करते हैं, husband, wife, right? So I just want to know that how can couple, start with such kind of investments together? Right.
So, we had done financial planning for one couple, and I think both had, in fact, slightly different, long-term objectives. So, one has to take into account, what are the common objectives, where there might be some differences, and then accordingly construct the portfolio. Somebody may, they may have a plan where one of the couple, is planning to work for longer years. Maybe one is planning to retire a bit earlier. So accordingly, all those things have to be taken into account.
Right.
In creating that portfolio.
Right. सबसे ज्यादा बेनिफिट क्या होता है? इंडिविजुअली करते हो तब रिजल्ट ज्यादा मिलता है या टुगेदर व्हेन यू डू यू गेट मोर रिटर्न्स?
I think doing it together, the advantage is that obviously both may have some ideas and more info, together they can make maybe better decisions. So that might be the advantage I can think of. I'm not sure whether it will generate higher returns or not, but I think it is something to be the process of investing together. I think the journey becomes a little bit more enjoyable, I would say, in that respect.
Right. Gold ETFs and sovereign gold bonds, they are more better than investing into buying jewelry. 100%
better, because buying jewelry, the day you buy jewelry, that jeweler has taken, is not giving you 100%. There's something that you already lost right there. Making of jewelry results in some loss of gold. And also, when you want to sell it, you may get something less than the full value that you would otherwise get. Jewelry you have to worry about where to keep.
Right.
There is the risk of loss, theft, and all that. Whereas the ETFs and so and gold bonds and so on, those risks are not there, and they are so easy to also sell.
Right.
And they give you the same return as gold. So yeah, those are great investments compared to owning jewelry.
And even for long term, I feel sovereign gold bonds are much more effective, right, compared to other investment options that we have.
I mean, gold as an asset class has done phenomenally well in recent few years. So when you look at that data, then obviously gold looks pretty good. But I think in a very long run, I continue to believe that equities are going to give you better returns. But one can have some part of the portfolio in gold for sure.
Right. And when it comes to FDs, right? आपको लगता है कि अभी modern era में, with so much of less return, do you think it's a good option to invest in FDs when there are so many different options we have which gives much better result than FDs?
So I think in the initial part of our conversation, I talked about when are you going to need how much money. So the money that you're going to need, maybe you feel that you need to have some liquidity. The money you could need in say next 2 years, 3 years, up to that period, you want to keep it in a very safe and easy to liquidate assets, and assets for which the value will not swing much. So for them, for that particular purpose, one of the options is FD, but that is not the only option. You could also do liquid funds. There are something called arbitrage funds, and there are other potential investments that give you similar or maybe after tax basis, like arbitrage funds on an after tax basis, give you even better return. So one has to compare that versus FD return. And there are also good quality banks, not the big names, but smaller banks that sometimes give you 6-7% interest rate on savings account.
Yeah.
So that could also be considered. But all of this is part of the portfolio, the money that you could need rather in a near term. Doing a say 5-year FD doesn't make any sense to me, for example.
Yeah. वो वैसे भी अभी FD का rate is 6.4 to 7.4 if I'm not wrong. That is the FD rate.
Right.
Currency depreciation. तो वो time पे gold की FD. What is the better option?
Gold.
Gold.
Gold won't depreciate because of currency, Indian rupee, right?
Right.
So that's why it is better. And another option, if you want to fight currency depreciation, is invest in global markets. Because that is also another way to fight that currency depreciation.
Right. And if somebody is having, people who are listening to us, जिनके पास extra cash पड़ी है, let's say X amount of money, 10 lakhs, right? तो अभी क्या करना चाहिए उनको? कहाँ पे invest करना चाहिए? First thing.
Abhi, Indian market looks quite okay from a long-term perspective. We haven't had much of a move in the market for fair bit of time now.
Right.
Economy looks like going in the right direction. We had a very strong GDP number that just came out for second quarter, and I think without that did not even capture the full benefit of GST cut. So that you're going to see in the coming quarters. And I think there is a 7th pay commission, which will result in increase in salary of government employees. That will also, some of that money will come back to in form of consumption.
Okay.
So I think we have a very benign inflation. So the Reserve Bank has the ability to make increase the liquidity in the market, maybe bring down the interest rates further. So all these are very positives for the market. So I think from a longer term perspective, this is a good time to invest.
Which sectors would you recommend to invest in? Whether it is pharmaceutical or bank or financing, is there infrastructure, is there? So is there any sector that you would highly recommend?
So our focus is more on individual stocks than just selecting sectors. And I can't say that this sector looks phenomenally better than this sector. Our economy is doing well, growing at pretty decent rate. So I think the benefits are going to many different sectors. But yeah, you could say that one of the big themes remains the power, the increase in power generation, domestic power, one of the themes that recently government has come out with a proposal to privatize power distribution. So that sector looks pretty promising to me in that regard. And yeah, domestic pharmaceutical remains a very good sector if you choose the right company. Healthcare is the sector is doing quite well, hospitals and so on, and that will continue to be the case.
So now it's time for an audience poll. So where would you park your rupees 5 lakh for 1 year? Number 1, stock. Number 2, mutual fund. Number 3, gold. Or number 4, FD. And with AI booming now in the current situation, so how well has it impacted your field?
I think I don't think we are fundamental long-term investors. So the way it has impacted our field is that when there is an opportunity in the market, when people have access to better technology, more tools, those opportunities get discovered more quickly by more people. And so our window of opportunity has shrunk in that respect. So we have to be more nimble. We have to adopt those new tools and make sure that we are grabbing those opportunities before other people are. So that way, our job has become more challenging, but also more interesting.
More interesting. What is the process at Sameeksha Capital, when somebody comes for an investment? So what are the steps? Like, how do you take them forward?
So, many people come with the idea that this is what they want to do. They have heard about our products and they want they have a specific, very specific interest in a particular product. So they want to know more about the product, and so we go through the explanation of that. We also do the risk profiling. We want to understand a bit more about them and just make sure that, the products that they are talking about is going to be suitable for them or not. Some people come with an idea, with a very broad idea that they want to invest, but they don't know what.
Yeah.
Then we take them through the variety of options we have, and based on their requirements, we basically suggest what would be suitable for them. And one of the things that a lot of people don't know about is that we also have an option to invest outside India. So we also offer those options. So we kind of so some people they may not have come thinking about that option, but after listening, they consider that.
आपको लगता है कि इंडिया में इन्वेस्ट करो उससे ज्यादा बाहर इन्वेस्ट करो तो रिटर्न ज्यादा है?
The history says that, see, we are fortunate to be in a country which has had one of the greatest equity markets over the last 30 years. So if you look at the returns of the Indian market over the last 30 years, even in dollar terms, they would be one of the best in the world. So, वैसे तो India is a very good market to invest. But I think from a portfolio diversification point of view, risk reduction point of view, it makes perfect sense to invest some money outside India. And that's why we recommend that. And so it would be difficult for me to say whether one will give more return or the other.
Yeah.
But
you
overall,
can invest.
Yes.
Like completely not investing.
Yes.
से बदले थोड़ा बहुत invest कर सकते हो.
Absolutely.
Outside international market.
Sure.
So, sir, now I have a rapid fire questions for you. Number one is SIP for 10 years versus lump sum today. Which beats in the long run?
Lump sum today.
Lump sum today. Okay. Company with zero debt but negative cash flow. Safe or risky?
It could be risky. I think more details need to be looked at.
Tech stock is growing with 40% annually versus FMCG stock is growing by 15%. So, which is safer for long term?
If the tech company is in a leadership position and that technology leadership is going to last for a long term, then it would be safer for long term.
Okay, so tech.
Yeah.
Right. Okay. SIP during market crash. Should an investor increase the amount, pause, or continue?
First of all, SIP should be continued, but lump sum investment should also be considered during the market crash.
Okay. A fund has 5-star rating, so can you trust blindly?
Answer is no, because 5-star rating is a good thing. It reflects very positively on the fund. But then there are factors sometimes. Just because it's 5-star rating, it is not a guarantee that it will be a better performing fund in the future.
Right. A stock gives 5% dividend but no growth. So one should invest or skip.
Well, if it's 5% dividend and no growth, the return is accordingly also going to be low.
Right.
So, and the risk is also going to be low. If the dividend stream is secure in the sense that the business is such that it will keep generating your income. So if you're happy with that kind of return, then you can invest. It might still give you slightly better return than say fixed income. Because the tax rate on the dividend, depending on your situation, may be lower.
Right. And lastly, what is that one piece of advice you would like to give to people who are listening to us when it comes to starting their wealth creation journey?
Start early. Don't wait. Don't procrastinate. Set aside some part of your saving income for savings, because starting early is the most important way to build wealth.
Yeah. So thank you so much. I had a great time knowing about a lot of things related to finance.
Great.
So thank you.